Geraldine, the ECB is pumping money into the system. BTPs are benefiting. We're seeing peripheral stocks really benefiting. And this is backed up as well by a huge rally over the last few days that we've seen in European stocks as a result of more positive vaccine news. The combination of all of this together, does it encourage you to think that Europe is a good place to put money to work right now?
I think the way I look at it is that certainly when we look at 2021, there are some good things to look forward to with the vaccine, with continued support from central bank and more fiscal spending ahead of us. But there's one commonality for this recovery and this cyclicality, and I think most countries have written it on the wall. It's green and digital. So you need to look at those companies which are going to be the enablers of this recovery. We can find a few in Europe, but I would think that a lot of these enablers are to be found in Asia and also in the United States. So I think taking like a bit of a broad view, it's not necessarily where the money is going to be spent, is which companies are going to accrue the benefits of it.
Well, but that's interesting because typically if you're talking about, say, ESG or green investing, that's a full-on Europe play in terms of the amount of money that they'll give to companies and sort of development and infrastructure, et cetera. But you don't see it as that?
Not entirely. I think a lot of this green revolution comes from renewable energies and also electric vehicle and the full ecosystem around it. And a lot of these things are dominated by Asian companies when it comes to, solar panels or even battery and electric vehicles. So I think where a lot of the value added is going to be made is not necessarily on the P&L of European companies. That's, if I generalize, of course, there are exceptions to everything that I can say.
Geraldine, in the short term, though, do you think that Europe is going to be a beneficiary of the end of COVID? And I appreciate that I'm talking not here about the next few weeks, but maybe the next 6 months as the vaccine starts to kick in. Europe looks like it has a lot of beaten up companies and a lot of beaten up economies. The Spanish market in particular, I think over the last 10 days, it's up by 20% in terms of the equity market. Tactically, how do you play Europe?
Well, I think you have to sort of make a differentiation here. There were some sectors that are extremely impaired by the lockdown, and there is some normalization of certain companies and valuation. But we cannot forget that we are in an era of disruption, and there are secular forces which are at play that were there before the pandemic, that got accelerated by the pandemic and are likely to continue going forward. So I think, yes, there is a normalization that needs to occur, but ultimately those secular forces are still around. And because the recovery is going to be mostly green and digital, I would say that government now are even active participants in this disruption. And I think you need to sort of keep this on the compass and on the horizon and really sort of keep those secular things on. I would think that things that were disrupted before the pandemic are unlikely to see a miraculous recovery. They are likely to remain disrupted. So there can be an adjustment in valuation to take into account some of the recovery, but the capability and the endurance of producing profitability is what ultimately will make the difference in companies' performance. And in that way, if we look at the post-COVID and cyclical companies and cheap valuation, I would think that Japan is, in fact, better cyclically and sectorally orientated than many of the European stock markets.
But what's interesting about when you talk about post-COVID is that you have central banks and you have fiscal policy, which is what we were talking about earlier with Paul Gordon. And in that respect, Europe seems to be, and the UK, ahead of kind of everywhere else, where you are going to have monetary and fiscal stimulus in some capacity working together with the ECB as a very big backstop. In a way, when you have firepower losing steam in Japan and here in the US, you just don't have that fiscal coming through.
That's very true, but I think I call it the follow the money, where the P&L or the profit is going to accrue is not necessarily where the GDP growth is being sort of created. So yes, Europe will see GDP growth, but the enablers of this recovery and where most of the value added is likely to accrue is not necessarily with European companies.
What advice would therefore you give to European governments who are preparing to embark on massive green spending programs? How do they make sure that that money doesn't leak out of Europe?
I think there are certain things that are being done. For instance, Chancellor Merkel has encouraged certain of the large battery makers to come and build factory in Europe to sort of help the German auto industry. There are hopes that certain European companies are getting on the bandwagon on these things, but they've taken a lot of lag in terms of battery, in terms of semiconductor technology, and for renewables, for instance, like the vast majority, I think close to 70 or 80% of solar panels are dominated by China. So when it comes to the choice, what's going to happen is that, of course, European workers are going to have to install those solar panel or renewable energies in Europe, but the kit is really more often than not made outside Europe, or when it's made in Europe, certainly very often by companies whose headquarters are not based in Europe.